It's Monday, July 14th. Let's level up. VIX is not confirming new highs. Bitcoin is ripping. We're seeing some good positive price action in NVDA, but overall the market's still a little bit shaky. It seems very squirrely. We did see a Monday move down based on tariff news, but ultimately it did recover, and then we saw some positive news about NVIDIA after hours with them being able to sell some chips into China. Took up the futures right into resistance and then pulled back. I could still argue that we are in a bit of a responsive market as opposed to an initiative one, but it isn't the one-to-one responsive as it was before. We are starting to see some breakouts. They are holding, but they're kind of tentatively holding. So for me, the jury is still out because we do have earnings coming up, and then we have a Fed meeting following that. As far as the VIX goes, for the bulls, they need to get it below 17.02 and really below 16.23. If they can do that, I think that they have still further upside that's sustainable, probably the breakout variety. On the upside, there has been resistance at the 100 MA, currently 22.24. There is some resistance, though, into the 18s, 19s area. That's the underside of the old uptrend line, just depending on how long it takes to get there. As far as futures go, the bulls basically need to hold 63.0675 to 63.13, particularly the 63.13 plus, and then clear the 63.32 quarter and hold. In the after hours, we saw a look above and fail. We did pull back, but so far we have held that zone of 63.0675 to 63.13. Anything below there, I think could see a still further liquidation break, probably somewhere close to 6,300 and maybe still below. I always worry if we can't hold the big number like 6,300, we could come down to 6,200. But if we do hold 6,300, we probably go to 6,400. As far as the Qs go, we hit channel high in the overnight. There, the bulls need to clear and hold 23,102 half. On the downside, they're kind of okay. But if they start losing 22,934.75, it starts getting a little bit more fugly. Generally, the ES has been a little bit stronger than the Qs in that regard. The apples to apples to that, by the way, is 62.65 half. On the upside in the Qs, the next resistance is 23,269 half. That's the 2 times range. The ES is pumping the 2.618. That's why I think there's more resistance there at the 63.32 quarter. But it is interesting to note that the Qs are lagging, just stalling below the 2 times range, which again is 23,269 half. As far as SPY goes, I told you not much to worry about until we lose the 10 MA. Currently that's 622.06 and rising. The reference high at 626.87 hasn't really been cleared. If we can, the 2 times range on the upside there is 658.82. I think pullbacks to 613.23 are still okay. Generally, I've said I think that 605.06 to 613.23 with a potential overshoot to 600.15, which is the 623 gap fill, and now the 50 MA are still buyable. Anything more than that, though, becomes problematic, and technically anything below that 613.23 is a look above and fail. So I'd be careful. It would be a bounce for a trade until that can clear. As of now, though, it's still smooth sailing. We're above the 10 MA. We're well above the 613.23. But I am still cautious because of that VIX not confirming. As far as the Qs go, we are over the 2 times range. Needs to hold 552.01. Anything below there, I think could see a liquidation break, probably back down to the 540.81 to 544.26, which is of course the breakout, and 20 MA respectively. I've said before though that the 531.65 up to 540.81 area, which is the apples to apples that we discussed in the SPY, I think could be key support and probably a buy at least on the first test. But generally, if the bulls can't hold 540.81 on pullbacks and maybe we get a dump or something on earnings, that would be pass don't pass line area. I'll be curious to see if we get the blow off top type of move on earnings or if we do get the check back to the breakout. I would prefer the check back to the breakout scenario because then you could trust the breakout a little bit more and you don't feel like you're chasing as much. But hey, we trade the market we have, not necessarily the one we want. And right now, dips have been getting bought like we saw today on Monday, even with tough tariff news. Apple had relative weakness today again, although the buyback has kept things stable. Generally there, the bulls need to hold 208.42 or it could test back to 203.93. I've been looking for that 20 MA check back. That's currently 204.79, but I think between 203.93 and 204.79 would be the buy the dip area. On the upside, we saw resistance at 214.66, which is where we sold it. I would be looking for the reload, though, on trend on the 20 MA if we do get some kind of a liquidation break. After hours, there was news on NVIDIA that they're going to sell their H20 chips into China. The 2.618 that we've been looking for is currently 170.55. If we kept on going and made it up to the channel high, it's just a little bit higher, just below 173. Google's still acting well, but needs to clear and hold the 181 11 area. If it gets back below the 179.68, it could be a look above and fail, and we could pull back to the 173.79. If it does keep going, I think the upside target is 192.81, which is the 78.6 of the range. Currently, that 181.64-ish area is the 61.8. So that 181 strike is very key. Amazon still acting well. I think you could raise your stop to today's low of day at 224.24. Generally, anything over 224s is fine. Below could see a liquidation break. On the upside, channel high comes in close to 229.15. If there is a pullback, I'd be more interested in buying it closer to 214.84 to 218.02. That, of course, being the channel low, 514 reference high breakout, and the 20 MA respectively. Tesla's still bouncing, but it is into our resistance zone at 319.03 to 325.10. I do like trimming gains into there. If we do get to 331.05, probably a good area to start exiting and raising stops. Probably wouldn't let it get below 325 on you at that point. I think low of day now is a good reference. Raise stop at 312.67. Anything back below the 10 MA at 307.73 is just an outright short. Bitcoin, nice move. Bit of a topping tail today. We do have a potential secure high. To negate that, the bulls need to get over 120,695. If there is a check back to the breakout, that's anywhere from between 110,150 to 112,345. On the upside, if we do keep going, channel high is into the 130,000s. Just depending on how deep into the 130,000s that is, depending on how many days it takes to get there. Generally, I think Bitcoin pullbacks are probably still buyable though, but it has run quite a bit very quickly. Interest rates have not really been cooperating for the bulls, but it's been in a small manner. I think they're okay in TLT as long as 84.89 to 85.26 hold. Anything below that, I think could see a still further liquidation break. There, though, the bulls will need to eventually get over not only just the 20 MA at 86.84, but 100 MA resistance, which is 88.10 and falling. That 100 MA resistance is really the key for the upside, but we have not been able to break above it. It was challenged back on 6.30 and 7.1, but ultimately failed. So bulls will need to put up there, or they could see some trouble. I do still think the Fed is cutting, and the path of interest rates is lower. It's just higher for longer. Dollar starting to see some love in getting bounces. I think if you're long, you could use the 20 MA as a raise stop at 97.674. On the upside, the 50 MA is the obvious next upside target and likely resistance at 98.836. And falling, I think the sentiment on the dollar just got overly bearish, and you're going to start seeing some of this foreign investment come back into the United States, particularly with all the trade deals that the president has negotiated. So look for the dollar to maybe start to firm. Generally speaking, dips are getting bought, pops are getting sold into. I think that coming into earnings, it makes sense that the VIX is starting to get a little bit of love, particularly with the Fed meeting right on the heels of that. Base effects in this range low. We still have the Ukraine war, which seems like it's going to heat up, and things with Israel and Iran are far from resolved. I think that the market is generally into a seasonal period where things start to top off a little bit, that mid-July period. So I would use the opportunity on pops, particularly into earnings, to lock in some gains and not necessarily chase big moves up. If we do get dips, it'll be interesting to see if they're outsized and if they are bought. The key for me is going to be obviously Netflix. I believe they report on Thursday. I'll be curious to see if it pops, if the pop is sold into, or if it is sustained to go still higher, or if there is a drop, if it's bought back up, or if it's a drop and it's sustained and still goes lower. I'll also be curious to see if the move is inside the expected move or an outsized move. Usually outsized moves tend to have legs. Inside moves tend to get faded. If it's down, it could rally back up. If it's up, it could fade back down. But if the move is gigantic to the upside, it probably does get a few more days of blow off. On the downside, I think you could see a larger pullback, maybe back down to the 1064 or even maybe 999 eventually if things are bad enough. Like and follow for more.